Hello everyone, welcome back to my channel. And in my today's video, we're going to discuss about a very interesting company. Now, I'll just let me put you through a situation, right? Imagine a company growing their sales by almost 185%. Margins are about 60%, but at the same time, the profits are falling. I mean, when you think about this, it sounds crazy, right? But this is actually what is happening with E2E Network. It's one of India's fastest growing AI companies. So one of the biggest question it is like whether it's a next AI winner or whether it's a value trap. So let's just look into this. We'll go through their recent results of Q4 FY26 for the whole year, and we'll deep dive through it. But before we get into that, let's understand what does the company actually does, right? So if you look at E2, right, they are actually AI in cloud infrastructure company, right? So just imagine like this. So instead of buying expensive GPUs, companies can rent from E2E network, right? So this kind of business is called GPU as a service. And I'll tell you why is it important, right? Because AI models like Chat GPT, LLMs, and deep learning, they need massive GPU power. And what does E2E does? They provide these GPUs. They have high performance GPUs. They have AI NML platform called as TIR and cloud infrastructure for startups, enterprise, and for government. So if you actually see, they're essentially building a, how to say, a backbone for AI India, right? So here for companies who cannot invest on their own GPUs or buy their own things. So what they do, they come to ETE network and tell them, okay, we're going to rent your GPU for our AI purposes, and we're going to pay you a certain amount of rent. So this is how their business runs, right? So they provide GPU as a service. So let's look into their Q4 results. So in Q4 FY26, the revenue increased by almost 185% to 95.6 crores. EBITDA was up by almost 336% to 58.1 crores. And the EBITDA margin was almost 60% plus. I mean, if you look at this number, then the growth is insane, right? But when you look at the profit number, that's where the twist comes. Because if you look at the profit was only around 6.5 crores, and it was down by almost more than 50% YOY. So if you actually think revenue is going up, but profit is going on, so the question definitely comes to our mind. Actually, what is happening? So let's look into details and understand what is the issue and why the profits are falling, right? So, and this is one of the most important part of the story. The problem is the depreciation. We need to understand, right? E2E network is buying massive amount of GPUs, and these GPUs are not cheap. They are very, very expensive. So if you look at the depreciation number, it went up to almost 55.3 crores in just one quarter. And if you look at for the whole year, the amount of depreciation they had to provide for is almost 169.3 crores. I mean, that is, it's huge. And leaving that aside, if you look at the Q4 numbers, the other incomes drop sharply, finance costs are still there. So even though the business is doing great, right? If you look from the accounting profit perspective, the numbers are getting crushed. So if we look at this business, right, it's a classic growth business where the company is investing today and sacrificing their profit right now, knowing that in future they will do much, much better. And if you look at the whole year, right, if you look at the whole FY26, right, so the revenue has shown a strong growth and grew by almost 245 crores. And EBITDA also improved, went up to almost 126 crores. But if you look at the net profit overall, they had a loss of around 15.6 crores. Last year, this company was profitable, but this year it was a loss. So this clearly shows that E2E network right now is in investment phase, right? So they are not worried about the profits right now. They know what they're doing is the right thing. They're investing for the future, and the profits will definitely follow. And if you look at their whole overall story, right, they are investing heavily in their growth, right? Because if you look at their capacity, right, they have already deployed thousands of GPUs. Almost the numbers are almost 5,000 plus, and they have added next gen NVIDIA Blackwell GPUs, and they raised almost 1,480 crores from various rounds of funding. So in short, they are betting on AI, and obviously the investors who are putting their money in this business, they are also betting on this company. And over here they think that they're going to do the best. Obviously if they succeed, it's going to be a huge upside, but if they fall, whatever the money has been invested will go to loss. So let's look what is working in their favor, right? First of all, if you look at the overall market, there's a massive AI demand. They have high EBITDA margin of around 50 to 60%. They have strong positioning in India, and they have an early mover advantage in GPU because this is one of the first companies who came into this AI platform. And if we actually look at one more important thing, right? AI is not just a trend where it goes and it will come back. The whole, structure is changing towards AI, and everyone is depending upon AI. No matter which company, if they are not using AI for their business, they're going to lag behind. And at the same time, even though there are so many advantages, but we should not ignore the risk also, right? So if you look at the risk, right, obviously, currently, if we see from the risk perspective, the profits are collapsing. They have high capex due to which there's a high depreciation. And obviously, the other and the most important thing is the execution risk. Yes, the demand is there, people want to use AI, and the company is raising the fund for the same thing. But what we need to keep an eye on, how do they execute it, right? If they execute it well, it's going to be really amazing. But if the execution is not that great, right, it's a big risk on that. And obviously, the other thing is the whole thing depends upon the AI demand staying strong. Because if the AI demand suddenly uh, drops down, it could be a problem for the company. So if I mean, I'll finish the video by saying like this, right? So E2 is not a traditional IT stock, right? It's a AI infrastructure bet. If you look right now, what is happening with them, the growth is explosive, right? I mean, imagine growing at 185% YOY for Q4, and EBITDA growing by almost 330%. But the only challenge is the profit is not right now at this point. If you ask me from the risk perspective, yes, the risk is high, but at the same time, the potential is also very high, because if the company, what they're doing right now, what they're investing in for their future, if they're able to execute that very well in the next 5 to 10 years, they're going to do really, really amazing. And if you like such analysis, please do like this video and subscribe to my channel. And if you want any other stocks to be analyzed, please do comment. And at the same time, I have a question for you guys, right? Would you invest in E2E networks today? You can answer yes or no by mentioning in the comments. For Thank you and God bless you.